Welcome to Coffee with Joe for Thursday, July 22nd, 2010. Hey Joe, how you doing today?
Hey, Pete, salute to you.
We're going to keep going with dissecting this program from monetary reform for
Yeah,
1939 from 1939. We've done several videos, one about the standard of stable buying power that they suggest as a criteria for managing the money supply in this program for monetary reform. The next one was about the monetary authority, which is the independent, created by Congress organization that determines the amount that the money supply is supposed to increase every year in order to maintain that standard of stable buying power. And now we're moving on to what they call Section 9 in the program, which is a criticism of the fractional reserve banking system. And they have a great, I'm going to read a little quote from it here, Joe. It's a great, concise criticism of the fact that our current system, our money supply is tied to the amount of lending that goes on in the banking system. It's tied to the bank's willingness to lend. Now, this is
that,
relevant right now. Actually an article I saw in the paper just today in the business section about how consumer debt is even lower now. People are, worried about being able to pay. People are getting out of debt, and the money supply is crashing, just as it did in the early 1930s.
right.
And these
That,
folks think that that money supply crashing is the cause of the depression. Now, why does the money supply crash when uh, loans get paid off? Let me read this. Bank loans first increase, and their repayment later decreases the total volume of the country's circulating medium. Ordinarily, the increases and decreases roughly balance. But in boom periods, the increases preponderate and thus drive the boom higher, whereas in depression periods, the decreases preponderate and thus further intensify the depression. In booms, many are eager to borrow. In depressions, lenders are loath to lend money but eager to collect. This is the overlend and overliquidate factor that tends to accentuate booms and depressions. And it is the tie between the volume of bank loans and the volume of the circulating medium which is responsible. It is this system which permits and practically compels the banks to lend and owe 5 times as much money as they have on hand if they are to survive in the competitive struggle which causes much of the trouble. Of course, in those days, reserve requirements were 5 to 1. Now the example that's commonly used is 10 to 1. And of course, as you have said many times, in the creation of money for the derivatives, there's basically no reserve requirement, right?
right, right.
Joe, this
That,
question of fractional reserve banking divides monetary reformers. The Swarm group, if you go to the Swarm USA website, um, they talk about government creation of money debt free, but they also talk about maintaining fractional reserve banking and managing it better than regulating it better than we have
right,
by actually enforcing those reserve requirements.
right.
And then you have monetary reformers like Stephen Zarlenga at the American Monetary Institute, and actually Bill Still, the Secrets of Oz video creator, who both oppose fractional reserve banking for this very reason.
There's two things, there's two things that you mentioned that I think in order to have a rational discussion about fractional reserve banking have to be kept in mind. And quite frankly, to me, the most important one is it's the nation's circulating medium of exchange. It's the money system, our money system for our national economy. And so the question becomes one of why, if it's the national economy, and it's our circulating medium, it's our dollar, then why should anybody except the government, have the right to determine the amount of money that's going to be in existence to meet the needs of the people? There's the other kind of opening salvo on the fractional reserve system in the program, Pete. This was what it says in there. It says fractional reserves gives 1,000 of commercial banks power to increase our thousands of commercial banks power to increase or decrease the volume of our circulating medium by increasing or decreasing bank loans and investments, the banks thus exercise what has always and justly been considered a prerogative of sovereign power. And to me, that's the foundation issue, Pete. That's the foundation issue. Not, that fractional reserve banking, accelerates and decelerates, and it's as pro-cyclical as anything could be possibly be designed. Okay, which is the cause of the inflations and deflations. It's that we're a sovereign country and we have our own monetary system. And this is one of the reasons why, Pete, that when people don't take the perspective that it is our national monetary system that we're talking about and understand monetary systems. I think I've said this more than once, Pete, on our videos, but people ought to have a read of Alexander Del Mar's The History of Monetary Systems, because that's what we're talking about. And in any modern society today, the ability of the people to control their economy is determined by who controls the quantity. And the whole point about fractional reserve banking, because this thing about the point about the ability to regulate banking, okay, to regulate the money supply by strict adherence to the reserve requirements. You can't, Pete, when the banks don't want to lend, you can't make them lend.
Yeah,
but the banks are sitting on 10 times their reserve requirements right now.
Yeah.
So what would you do?
It only establishes an upper limit to
Right,
how much
right,
money they can create if
right.
it's actually enforced.
Right, exactly.
But it doesn't force them to create all that money.
Exactly. And as long as there's any benefit to the people that are not making the loans, and certainly calling in loans, is grabbing secured assets away from the people that took out the loans, Pete, there is an incentive for them to, and there always will be. And when you look at the history of how the bankers have acted, there's no reason to continue to give them that liberty. There's just no reason for it. There's no compromise that we could reach with them, Pete. There's no agreement that they would sign to give up their rights as the controllers of the medium of exchange that would be satisfactory, that I could possibly see. It just seems like it's impossible. It's an impossible standard. Its fluctuations are what causes things to go up and down and askew, and it's the supreme prerogative of a sovereign people and their government to have a monetary system that serves us. And what do we need today, Pete? Money. Money. It's the shortage of money. People want to talk about deficits. What are the deficits are all about? What it's about putting money out into circulation so that people can have jobs, so that people can have wages. And by the way, Pete, strong point I think to emphasize here is to go back and look through history, up through the 70s, when the money supply grew very proportionally to the increase in wages, and how from the 70s on forward, the late 70s, I admit, and the inflation bubble, that happened from the oil, from energy, but since that time, the amount of money that's gone into wages has grown. No, hasn't even really grown on a per capita basis, on a real money basis, not grown, and yet the debt has grown, exponentially. So what you have is the inability of the wages to keep up with the debts that's been created. Who does that serve? Who does that system serve, Pete? It's the bankers, and to me, even the liberals, the Krugmans of the world, Krugman and Niall Ferguson are having this huge debate, and to me, they're just kicking around the edges. They're not willing to talk about what really needs to be done and why. I haven't yet heard anything from Krugman, and I've been listening closely for him to say, yeah, but it's the prerogative of government to determine, how the money system is going to work. No, because he's a liberal economist.
Well, and if one of the goals of monetary reform, this isn't even your sovereignty issue, but if one of the goals of monetary reform is to eliminate the national debt, then the government can be under a fractional reserve system. If it's a 1 to 10 ratio that's enforced, that means that the government's only creating 10% of the money, which is the monetary base, and the banks, through the fractional reserve system, are creating 10 times that amount of money. Well, the government needs to be able to create all that money to eliminate the national debt, pure and
That's right.
simple. We
That's
can't have
exactly
we
right.
can't have two groups creating money and control the targeted money supply
Yeah.
to achieve this standard of stable buying power. Joe, I think we're out of time already,
Okay, Pete.
and we'll pick it up from there next week
Hopefully with full reserve banking, Pete,
with full reserve banking,
soon. Okay, I'll get
which
a
is
chance
the
to talk about
alternative.
that.
Okay.
Okay, Pete. Have
See
a
you,
good day.
Joey.